Oil prices in New York are gaining for a second day in a row, but they are still well below $95 a barrel. At least benchmark prices on New York's NYMEX are trading at that level anyway, down 17% from their high for the year. Well, by contrast, the other benchmark, Brent, based in London, has fallen far less. It's down just 12% in the same period. Well, the gap between the gauges stands at $18. Compare that to the average over the past couple of years of only $2. So what is happening? Let's ask Simon Wardell. He's an energy research manager at Global Insight. He joins us now in the studio. Simon, thanks very much for being here. Why the big gap between the two big grades of crude here?
Well, the real problem is with WTI. Its delivery point is in Cushing in Oklahoma, where it enters a whole series of pipeline networks that take it away to refineries or other parts of the country. But over the past year or two, we've seen increasing volumes of oil coming from Canada and also North Dakota, where they have oil shale. And what it means is there's a huge volume coming into Cushing now and not enough capacity to get that oil out to market. So there's a huge buildup of oil.
So they can't refine it and turn it into gasoline fast enough, basically. It's not a problem with demand.
No, it's an infrastructure issue. It's a pipeline issue. It's getting that oil to the markets it needs to get to, and they just can't do it. There's just too much oil coming in and not enough capacity to move it out.
Well, at what point does the infrastructure catch up? At what point do they gain that capacity?
They're building additional pipelines to either bypass Cushing, so they take the oil straight to the Gulf Coast, or to increase the capacity in Cushing itself and get the oil out from there. But it's about 2 to 3 years away before we get that additional pipeline capacity.
So does this gap stick around for 2 to 3 years?
I think so. I mean, there might be times where it narrows a little bit. You can truck oil out of Cushing, and if you can get it to the Gulf Coast, you'll get a $20 premium for it. So if the economics make sense, if you've got the ability to do that, then at times that gap will lower a little bit, or if there's refinery issues or maintenance issues. But generally speaking, there's too much oil going into Cushing, not enough capacity to get it out. It's going to be 2 or 3 years before there is that additional capacity. So we are going to see an ongoing gap here.
And in the near term, do you see that spread narrowing?
Not really. There's just no way that you can get all that volume of oil out of Cushing, out of Oklahoma. And until you can, it's going to be very much decoupled from global markets. So what we've seen is that around the world, people have not been pricing off WTI. They're pricing off Brent, other crude grades.
Does Brent reflect more the fundamentals of the oil market now?
Brent is a global price. WTI generally reflects supply-demand in Oklahoma. So I think most people are looking at Brent as the marker grade that they want to pay against in terms of global markets. WTI is very much down the list in terms of where you'd pick a global marker crude right now.
Let's look more generally at the oil price. I mean, we've seen it come down as there's concern about Greece. We've seen it go back up when people become a bit more optimistic. If we get a solution to this Greek crisis, where does oil go? 110 bucks a barrel?
Well, I think we will start to see things moving up. We will see in the second half increased demand if the global economy, the worst doesn't happen and we don't suffer a return to recession. But I think ultimately there's also a little less concern now about what's happening in the Middle East. Obviously, Libya is an ongoing problem, but I think the worries about that spreading to Gulf countries have begun to decrease. But the fundamentals are that the market's going to tighten in the second half. We're going to have increasing demand, and supply isn't really going to pick up.
Was OPEC vindicated by those members that didn't want to increase supply?
Well, they are going to need extra volumes. But what's been happening since they had their last agreement on quotas is that they've been increasing regardless of what the official pronouncement is. Essentially, the Saudis and the Gulf states are the only ones with spare capacity.
But those that didn't want to produce more oil would be looking at the oil price and saying, okay, yeah, it's come off the boil.
Yeah, and well, to some extent, but of course they can't produce any more oil themselves anyway.
Right.
So there would be no advantage in increasing quotas.
Right. Okay, Simon Wardell, thanks very much from IHS. Thanks very much.